Grand Rising, Grand Rising, Grand Rising, Grand Rising, Grand Rising.
Grand Rising.
Grand Rising, Grand Rising. The sickness is trying to get me, but I'm fighting it. I'm not letting the devil get me. Yeah. Throat's all sore and all them things there. I'm on the bush remedy right now, trying to sort that out. But Grand Rising, let's get straight into it and have a look. The markets are, nothing. They're kind of there's no great setups at the moment looking at things, but we're going to start doing some back testing and look into the strategy, understanding what we would have done, what we would do, and what's potentially upcoming. Okay, little things that I've got on my charts that I was having a look at. I was looking at Bitcoin to kind of get into this area first for maybe a short today. Bitcoin has been extremely bullish, all right? As huge bullish candles, it has been extremely bullish, and really would like to wait to see what happens. At the moment where, based upon what we was talking about in regards to understanding the bias, we could come to the conclusion that we're gonna have another bullish day in Bitcoin. It's possible, okay? But let's just scoot out to some other pairs first and foremost, and then we're going to be able to analyze from the top down, understanding the strategy that we use. So I'm going to start off. Let's have a look at our GBP USD. Okay, we're going to start off at GBP USD, which is the Great British Pound against the US dollar. We're going to remove everything off the charts so that we are actually starting in real time. And we're going to have a look at this market and understand what's been going on with it, all right? Because when I look at this market for the first time, it has to tell me a story, okay? The story that this market has been telling me is that it's bearish. Now, we always start like this, and someone's thinking to themselves, oh, this is basic, I get this. Well, I understand, I get this bit, I can do this bit. Well, if you can do this bit, then you can do all bits, okay? If you can do this bit, you can do all bits, all right? Because this bit is being able to give you a picture for you to make some decisions about what's been happening in the market. And I've put a few lines in here, all right? Sometimes you don't see it common that there's multiple lines. But ultimately what I'm doing is I'm just identifying some data points where the market has reacted, okay? And we can see the market's reacted to these levels and these levels also, all right? The top edge is pretty hard on them, all right? So let's go and have a look. If we understand that we like to sell from premium, from a top edge, and we want to buy from bottom edges, well, right now we are in sell territory. Okay, we are in sell territory. The market, pushed up into this level over here. Have a look. The market pushed up into these levels here. Okay, making some higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then the market broke that structure. Broke this swing low, broke this swing low all the way down to here. And now we're making a huge retracement back into these levels, okay? That retracement went all the way to the 618 retracement level. Now, I'm not Fibonacci, diehard enthusiast, but it just shows a certain degree where the market's going to say, we've tapped into the 618, and now we're looking at this market and we're looking for a reason to be able to get in for the sell, okay? Because if there isn't any reason to get in for the sell, then we should be continuing to buy this market up into space. But I've already given you a reason why I'm interested in selling this market, because we're in a premium in regards to that range, okay? We're at the top of the range, and I'd like to see this market turn around, okay? So if you can see it here, I've identified some levels on a 4-hour time frame, the range the market's been trading up within. Have a look. It's been trading up within this range. First was this as a level, but then we've got a bit narrower in here. And at the moment, we can see that the market is currently in here going sideways. Now, the way in which I've arrived at this point of analysis, you all have to be able to get there. Have to be able to quite quickly identify what's happening in the markets. To be able to say, okay, this is what's happening right now. So if the market is going sideways, do I want to be buying it? Do I want to be selling it? Well, probably I don't want to be doing now in a sideways market unless that range is so large that I want to buy from the bottom end of the range and sell from the top end of the range. Because you can trade consolidation ranges, but ultimately we like to trade when the market is trending. Okay, we like to trade when the market is trending. So at the moment, I can't get involved until this market breaks out of this blue box. Because at the moment, for all I know, the market right now is going to turn around and push all the way back up into here. Okay. Now, if I drop down to my hour time frames to give me some more detail, have a look at the markets pushing up in here, doing the hokey cokey, push down in here, did the hokey cokey, pushed up in here, did the whole, came down here, made some nice lower lows. At the moment, it's kind of doing the hokey cokey. Who wants to be involved in the hokey cokey? I don't want to be involved in the hokey cokey. All right, so I'm going to put my alerts, because I can't sit here with my mouth open for the whole day just looking at this trade. So I'm going to put an alert here, crossing down, okay, and we'll place an alert over here if we want, crossing up, just so we know. We can see what the market's doing when it decides to do something, and that's it. I want to see this market breaking outside of this range. Now, it might do it right now, do it today. Might decide that this little impulse like this is a nice little range for it. It's going to keep going on along that range and start breaking structure and pushing out of here. Maybe, baby. Yeah, maybe now is a little retracement back into this level here, and here is a fantastic time to get in for the sell. Maybe we can see some equal lows below here. We see the markets retrace back into an imbalance over here. I have a look where the imbalance that I retraced into. And, you know, maybe this is the imbalance tapped into here. If I drop my time frame down on a smaller time frame, and maybe now the market's going to come and break these lows and take this liquidity. I actually feel as though that is what it's going to go and do. But I'd prefer to get involved after the market shows me something. All right, I would prefer, look, I'm on the 1 minute time frame. So I'm just breaking down the fact that we just tapped into that imbalance. And now over here, we've just broken some structure-ish. We're looking at it. All right, we've broken this little swing structure over here on the 1 minute time frame over here. Okay, but we haven't as yet. Okay, but this market breaks there, does this, and then does this. Well, maybe there's an opportunity to get in early to try and watch this trade come and break these levels. Maybe. Okay, maybe. But, you know, ideally, I'd like to get involved when this market breaks outside of this blue box. And I hope you understand the concept of our indication, our correction, and our continuation. It's what the market does over and over and over again. Okay, so for argument's sake, let's imagine this is some 1 minute structure. I'm just using this just for argument's sake. You understand that the larger the time frame, the more convincing you can have in your move, the more powerful your zones and your candlestick zones and your imbalances are going to be. On a 1 minute time frame, which I would prefer you're nowhere near there. I prefer that at worst case scenario, you're at the 5 minute time frame. Okay, but I'm just so you can see what's going on in real time, because the session isn't going on for the whole day. That you can see that this is a level of structure over here on a 1 minute time frame. Okay, at the moment, the market is trading within this high and the previous low over here. That's what's happening. So right now, if the market continued to go up, that would be a higher high, higher low, higher high, relatively equal low, and it was the momentum is still bullish. But when the market breaks structure below the previous low, then that's giving an indication of maybe where it wants to go, especially if you're trading within the overall market structure and direction of the market. It's going to give an indication of where it wants to go. Then we're expected to see some sort of correction, and then we're expected to see some sort of continuation for us to decide that we're going to get involved in trades. We can't just hit the button based upon faith. Like right now, this market was coming down here. I can't just hit the button in here because we've seen some red candles, because it hasn't broken any structure, and that's on a 1 minute time frame. It's not even on anything substantial. So this is where patience comes into play, because right now you might as well go to the casino table and flip a coin, because you don't know what this market wants to do. Does it want to continue going up because it's made a higher high, higher low, and it's just had a little retracement back in here for some other reason? 8 o'clock kicked in and it decided to. You don't know. So you need to get some sort of confirmation. It's always going to be the previous low, the previous highest point. Can't be this bit here, because this bit here is trading within that range. Yeah, let me show you with these lines. Look, up here, down to here, up to here. All right. That is what this market's been doing from down here. Made a higher high, higher low, higher high. Everything within this point here and this point here is trading within this narrative of going bullish. The narrative here is that we are going bullish, Jay. That's why we made higher highs, higher lows, and higher highs. And at the moment, we're in the middle of that narrative, which is bullish narrative. I cannot get involved in the sell until that narrative changes. Yeah? Then I can say, okay, because this is in like, and the reason why I'm interested in looking at it is because from an overall perspective, that overall picture is I ultimately feel as though maybe, I'm not saying right now, I'm just talking about it because ultimately we've already spoken about this. We want this to break outside this blue square, all right? And if we want to be true to work, we want it to break outside this blue range, okay? But have a look at this blue range for example. Let's use it there. Let's use it more relevant. So let's use it. What's going on? This market was doing this. Have a look. The market was doing from down here, higher high, higher low, higher high, higher low. Let's push it all the way up to here, higher high, higher low. And now ultimately, this market is trading within it's trading within this range between this point here and this point here. It is, but I'll kind of miss something, so I'm gonna do that again. I missed the smaller range bit. So let me just go again. All right. Let's just take this little levels in here. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. That's a little bit more detailed. Okay, because the market, it's nice to think it's textbook and it does everything straight out of the textbook, but it doesn't. So you just have to look for the points. You have to look for the swing highs, swing lows, those levels. Now, if you can't see it, you turn to your line chart, and your line chart will help you identify better movements. All right. So at the moment, the market is trading within this level here and this level here, but previously from a bullish family, from a bullish energy. So I can't just turn around and be like, yeah, I'm getting in here for the sell, because ultimately the market has been bullish. Why am I buying it? Why am I selling it when it's been bullish? I need to see this market break, make an indication of where it wants to go. Hello, there's an indication, breaking this level here. All right, then more than likely I want to see some sort of correction. And then if I can find an entry and on a smaller time frame when it starts to continue, then great. If not, I wait till it closes down below with my stop all the way above the swing high on the basis that maybe the market's turning around in line with my overall picture, in line with what I believe the market may want to do. Okay. And the market, in my opinion, after breaking this structure here, boom, smashing past these levels here, making a retracement deeper than I wanted it to be. I wanted it to be a 50% retracement, but who cares? All right. But we can see these leveled around here, that there was some interest in this price point. Around here, the market kind of danced around this area. So if I was to draw some little range in here, the market kind of danced around this area. Yeah, previously it enjoyed this place, it enjoyed this price around here. All right, previously it did. So if this market starts going all the way up here and stuff, then I'll be like, okay, I'll just be standing and watching it. Think to myself, this is going to go and take these new highs. But at the moment, it's still in an area that I'm happy with, that the market may turn around. And if it does turn around here, ultimately we are targeting, quite large moves as the market continues to run to equal lows, yeah, and beyond. But at the moment, it's just turning that boat. That boat is just, are we very slowly? Are we going to turn that boat? Are we going to consolidate here all the way to Christmas and then start going? Who knows? That's why right now, if an ideal scenario, I would like to see that market get outside, break outside of that blue box. So at the moment, it's trying to turn the boat, but I don't know whether or not it's going to decide to go. We do want to go down, Jay, but at the moment, true Christmas and we all going on our Christmas holidays, we're just going to just dance around here for a little while. I don't know. May do. All right. So like I said, I've got my alert in here when the market does something. I'm done with looking at that. Yeah, I'm done with having a look at that. I'm happy with that. Okay. that analysis. Let's have a look at Bitcoin. Have a little quick look at it. So I was looking at it, and I did identify an area of interest that the market tapped into here. Look. Now, how have I identified that area is the question. How have I identified that potentially here might be a point of interest? Okay, let's start again. Yeah, let's try and see, why did Jay identify that area that's just turned around in? We have seen a reaction to it. Whether that's going to go to hell is another conversation, but we have seen a reaction to an area identified. If you don't believe me, look, there's the range in here. Can you see this? All right, I identified this area. Now let's identify why. Why did I and how did I manage to come to that conclusion? Let's jump all the way out on our daily time frames. Now, Bitcoin has been raging, actually got to 41,000, which is the highest it's been in 20 months, I believe. Yeah, 1 second, guys. Oh, bless me. All right, which is the highest it's been in 20 months. Okay, and so we're seeing the market raging up here. All right, now at the end of the day, for me, Bitcoin is expensive in the range. Have a look. Here's the top of the range. Bitcoin's just right up here, tweaking right, even pushed outside that little angle of the range here, but it's very expensive in the range. All right. Now it could just keep going and keep rallying. Could accelerate into this level. I'll just put another angle in here, like so. Okay, it could just accelerate into that level. Okay. Now we're looking left. So if we go over here, and I'll go to my weekly, let's go to my weekly for Bitcoin, just for argument's sake. I'm just trying and see something. We can see that Bitcoin, like as much as it's rallying right now, I'm not over the moon about hitting the button and buying right now. All right. Some people don't. It doesn't matter because they're trying to stick with this momentum, and this momentum might continue. So don't get twisted. It might keep pushing up. All right. I'm looking here, and I can see a little bit of imbalance sitting over here on the weekly time frame. Sitting in here, is Bitcoin reaching for that area over there? I don't know. Let me hide these lines. 1 second. 1 second, guys. Let me hide these lines. Is Bitcoin reaching up into this level over here in this imbalance? Maybe. Or on the weekly time frame, maybe. Okay. Let's have a look at it. Let's drop it down. Here's the daily. Okay. So if we're looking at this range, which I could draw it a little bit better, it's not the greatest way of drawing it. Let me try and make these angles a little bit better. All right. Now, how am I drawing these angles? You're asking. Is that I'm trying to look for data points. Trying to see the data points in here, which is the most relevant data points. I'm just going to leave it like that for now. All right. Either way, we're at the top end of this range. All right. We're at the top end of this range, and we could keep going. Today could be another bullish day into these levels. It could do. All right. Based upon how we was looking at things previously, understanding that this daily range, seeing a daily candle that breaks outside, the next one breaking that level, the next one breaking that level. The question is, do we think the next one's going to close above here? It might do. It might do, based upon looking at the bias of understanding this, the previous daily high, previous daily low. Okay. Let's go to our 4-hour time frame. Let's get some more detail about that push. The detail about that push is that we're in a range looking like this. Okay. That is the detail about that push. Okay. So at the moment, even if this market was going to push back up, we might see it first push into some of these concerns. All right. Over here. All right. So we might see this market drop down into some of the concerns. The concerns are these inefficiencies. Someone's going to call them a fair value gap. Someone's going to call them an imbalance. I don't care. Okay. But you just have to make sure that you know that they exist. All right. Now, if we're thinking to ourselves that maybe this market is trading within this orange range, there's a possibility this market wants to push down into here before continuing to push up maybe into this level to collect this in this weekly imbalance level. If I go to the daily, let's have a look in that daily within that weekly imbalance to see if we can see anything that gives us a little bit more detail, because the weekly level is quite large. Okay, have a look. So within that weekly imbalance over here, okay, we can see this daily imbalance over here. giving us a little bit more accuracy. All right, and this one was a weekly level. One was a weekly level. Okay, and we could go smaller some more, but that's enough for now, okay, because we haven't got anywhere near that at the moment. So the whole point is maybe we're going to get another bullish day, but after this market taps down into here. All right, so ultimately like this, if you know, you're looking at this market right now, especially as a day trader, and the market's supposed to be making higher highs and higher lows. Now the momentum at the moment, if you really wanted to go there, is that this market is still going to have another bullish day. It is. All right. I can't be selling this market as yet. Yeah. Until this market gives me some sort of confirmation that it's going to do something. And at the moment, the only confirmations I can see are higher highs, higher lows, and higher highs. I'm looking at this level right now, and personally, I'd be popping an alert in here. Yeah, I'd be popping an alert in here when the market is crossing down to see what it does when it gets in this 4-hour imbalance. Yeah, because by the time it gets there, it might be in line with this trend line. And at this point in time, might want to maybe. All right. I'm not going to guess. I don't have a crystal ball, but what I am going to do is I'm going to read and react to what the market does. Yeah, I'm looking at this. Sorry, guys, I am trying to fight a little, I don't know, seasonal flu or whatever it is. My throat's killing me. And so I'm just drinking some bush remedy. All right. So I'm going to be watching this market to see what it does from here. Let me drop my time frame down to a 15-minute. As you can see, if I really wanted to go there and understand what this market's doing, I'd do this. Have a look. The market came. If I was to draw some lines in here, the market is pushing up on that angle. Why that angle? Someone's saying, Jay, why have you put it there and not put it here? Because if I put it here, there's been a higher point. I can't just put the market over here. That don't make any sense. I've got to put it to where is the last lowest point and where is the last highest point. So that is taking into consideration these two data points here and here. Coinkydink happens to touch there. Coinkydink starts from over here. Okay, so at the moment, the market is trading within these levels. As you can see here, the market actually has just broken structure, made a retracement into these levels, made a retracement into these levels, broke structure over here, made a retracement into these levels, closed down below. All right. So on a smaller time frame, somebody might have turned around and said, you know what? I don't have a problem with selling this down into these levels here. I don't think we need to do that personally because the market has been bullish, but structurally, I would have been in this trade and I would have been profitable at the moment as it's kind of dancing around, okay? But where would I be interested in taking it to? Potentially into these levels here, because overall, the market is bullish. So this is the point about understanding what the market is doing from an overall perspective, okay? So for this potential trade, I've got my alerts in here, you can see them, all right? When this market comes down in here, I'm gonna be looking at it to see whether or not this market actually wants to continue being bullish. Yesterday was a bullish day. Now, whether or not we're going to be able to go and break above the previous high of yesterday, which is all the way over here. Whether or not we're going to have another bullish day is what I'm going to be watching. Is that market going to be able to break all the way over here of that high? And this is the previous bullish day low here. Or are we just going to have an inside day? All right. And for the fact that this market, there's some imbalance above, it's not impossible. This market just has to push up in here some more. Not impossible. Either way, I've got my alerts in here. I'm not guessing. The market's not giving me some obvious trades, an obvious direction. So we watch, we wait, and we see. It's that simple. Have a look at GU. The same trade I said, look, it's coming down there, but really I want to wait to see what it wants to do. And at the moment you can see it just dancing around that bottom edge. Look, now there is definitely liquidity building up down here below these levels. there is definitely liquidity there. So even when this market breaks out, I'm going to be concerned that the market might just be trying to grab some liquidity to just push up in the opposite direction. How am I going to be able to counteract that? Is I'm going to have to watch to see that after my indication and I get my correction. Let me do it like this. It's a better way so you can see it. After this happens, have a look. Yeah. Does this market continue to break this structure, or does the market start pushing up and breaking structure this direction? All right. Now, ultimately, like I said to you, you've got to be on a decent time frame. What I mean by that, I mean not on the 1 minute time frame. You have to look at the previous market structure and see what type of time frame was this market structure respecting. Look at this on the 15-minute time frame. This market here made a lower low, lower high, lower low. All right. This market on the 15-minute structure has never, in this impulse, it hasn't broken above the market, hasn't made a retracement, and hasn't closed back above. Hasn't done it. It hasn't done it from the top of this range here. Look, broke structure here, made a retracement, closed down, didn't close back above this level, made an equal high, pushed down again, came up here, pushed down again, broke the structure to the above, didn't retrace and close back above it. So on a 15-minute time frame, it's never done that. So that's a good basis. The reason why I'm saying that is if you go to the 5-minute time frame, you are going to see times when the market broke, retraced, and broke again. And then it lied to you. Because look, for example, here we broke, we retraced, we broke again, but then we lied to you and started going in the opposite direction. Like, have a look here. There's some little structure in here. In fact, that one's fine. I'm just trying to see anywhere else. So the market didn't really do it. 5 minutes, not too bad. It's not too bad. Even on the 5-minute time frame, we broke, retraced, didn't quite close back above it. Even on the 5-minute time frame, it's not too bad. So on that basis, I'm going to be looking here on the minimum of 5 minutes to 15-minute time frame and watching this market break this structure. And I'm going to see a retracement. If it closes down below, I'm going to get in for the sell, especially as potentially we're at the top end of this range, of this movement here out of this blue box. Yeah, but I am a bit concerned because of all the liquidity that we might see nam, and then we might see a kick all the way back up here and it decides that it wants to stay back in this box, that it's nice and warm in the box. All right, so I will be waiting for a break, retracement, and close back down below before I get involved. Break, retracement, close back down below, and then maybe I'm going to get involved with my stop either above here, on the basis that now, hopefully the market might decide to start trading down within this range. Why is that? Because I want to be in here for the sell based upon my larger time frame analysis. My larger time frame analysis is that we're in sell heaven. We're in a premium, and we've broken previous daily swing structure. And then we've made a retracement back up into this level. But if you really see on the swing levels, have a look at this. Let me show you something. On the swing levels, the levels that was touching some data points here, from here, like so. Yeah, let me make it a different color. Again, there's a lot of yellow lines. On that swing level, like so, if he's looking at some structure, this would be a swing level touching our line, as well as here and here. Yeah, not so much this one here because the previous hit low was lower than it. So at the moment we're trading within this level range here and this range here. Can you see that? The market at the moment is within here and here. Yeah, and we're all the way up at the top end of that place, which is a 61.8 retracement, and I'm hoping right now that boat is turning around and we are going to start to go to hell, down to at least to equal lows. And from where we are to equal lows is a lovely trade, well over 600 pips. All right, is it going to go there one day? No, because we know that GBP USD doesn't move 600 pips in one day. However, we're in a point right now whereby from this consolidation, you know, I would prefer to see this consolidation grab some liquidity up here and then decide to run. I'm not going to lie to you. I'm going to say that one more time. I would prefer that the market was actually up here, grab the liquidity from up here, and then decided to run in that direction. I would. And this is why that might happen now. Like that might happen, that we see some sort of wick happen here, and then the market just decides to go all the way back up here. And you're like, oh, Jay said he was going to sell it off. But no, maybe the market wants to be up here and then do this, nam, and then start going. I don't know. Hence the reason why we have these rules and we understand the market structure, and we say things like we're waiting to see what the market's going to do, because we don't know. If we knew, I wouldn't wait to see anything, because I know what's happening. But we don't know, unfortunately. Okay, so that's what we're going to be waiting to go and see. Let's go and look at another pair. Or if someone's got a particular pair they want me to look at, let me know. At the moment, the markets are not really doing too much, not giving a lot. All right, so have a look at Euro JPY. I'm not going to go and redo the charts. I am. I'm going to redo it, no problem. Go all the way up to our Grand Rising.
I'm on the tube. I'm on my way to work. Yeah. Before I cut out, there's a reason for that. There's non-farm payrolls Friday. Yeah. So that's a big data point. There's a few data points that are coming in this week as well. Today, jobs data today. I think today JOLTS as well. If you look on the red folder. So these data points are going to matter. That is why the market is doing that. Powell on Friday was kind of dovish, but they're not sure. That is why the market's doing what it's doing at the moment. There's some big stuff next week, interest rates, and I think that the Fed might slap the market down. So I think they're being cautious now.
Well, there you go. We've heard it there first, and it's great the way I get that confirmation from a fundamental perspective when I'm kind of going, market's a bit rubbish. The markets, they're kind of mucking about. And then, Alan comes through and says, well, the reason for that is you can see this is happening. I'm like, okay. So this just shows you how the market structure and the way the market sets up, how the way this group thinking, all right, whether it's coming from the institutions, whether it's coming from retail traders, is, waiting, understanding how the fundamentals ultimately dictate what's happening in the markets, okay? And the markets respect the fundamentals. Yeah, the markets, like, it's not if something crazy comes out in FOMC, we know that the market's going to react to that. Okay, and the market is getting its data points from fundamental information. Okay, so that's why right now these are the times when you be patient, you sit on your hands, you only take trades that make sense. Maybe you try and take trades that are outside of the sphere of having real, being impacted by the type of news that's coming out. Okay, ultimately, USD news affects everything. But for example, have a look at this Euro JPY. So this Euro JPY is on a daily time frame, has been making higher highs and higher lows and higher highs and higher lows and higher highs. Okay, we've seen now a big bearish impulse here, because if we used to look at this last impulse here of of EJ, from down here up until I want to make it a bit more even narrower like this. I'm going to take from this level over here, and I'm going to make it a different color so we can see it. The market, as we can see, price has broken outside of this little market in here. All right, price was pushing up in here. And we saw on a 4-hour time frame, look, structure's been breaking, lower lows, lower highs, lower lows, lower highs, made a retracement all the way back up into here, and then continued breaking the structure to the point where right now, the price is breaking outside of the market. Yeah. Now, I'm going to connect some dots like so. And the question is this market going to continue pushing down here and breaking larger structures? Go to our daily time frame. We can see how we've had based upon us understanding the bias, what we was going through yesterday, right, showing how we can get a daily bias, is these previous days' highs and lows gives people an indication. It's not the be all and end all, but it gives people an indication of what might be happening the next day. So that's the high and the low of this previous day. The market's closed bearish outside of that day. So in here, we didn't know what the market was doing because the previous day was here. So let's imagine this day here. Let's just go here. this candle closed bearish outside of the previous, below the previous low of this day here. Okay, so we're expecting the next candle to be a bearish candle, all right, which it was. Over here, we're expecting for the next candle to be a bit closed bearishly outside of here, which it did, all right. This is the low of that day, low of that candle. This is the high of that candle. We're expecting for the next day, because this one was bearish, to be bearish also, which it did. Closed all the way over here, bearish, okay. This is the low, this is the high of the day. We're expecting the next candle to be bearish, which it was. All right. Closed. This is the low of the day and the high of the day. This is leading us to today. Now, based upon this, this is saying that maybe this market is going to have a bearish close outside of this level. But understand this bias obviously has to end at some point. And if we're looking at these candles, this market pushed all the way down here, and then the demand came in and pushed it all the way back up here and closed it in there. So we might see that this day, that this candle closes within this candle as a kind of inside day. Within this candle, we might see it, because when I'm looking at this market, we've pushed all the way down here, and we can see some sort of reasons why the market might decide to retrace back into these levels. We can see some reasons, some clear imbalances here on the daily time frame. Huge imbalances on the daily time frame. Now let's drop our time frame to our 4-hour and get some more detail. Okay, so now we're going to get some more detail in this impulse pushing down. Have a look. Touching these lines. Can you see I'm touching these lines over here? All right, if I make that orange and the bottom end like so, we can see that ultimately we're not in the best place to be taking some sells right now, because we're at the bottom of this range in here. Ultimately, we'd like to see this market come back in here. If we think that today's going to be another bearish day, we'd want to see this market come back in here for us to sell off from up into this, from this imbalance level. But at the moment, based upon what's previously happened, but what's previously happened in the previous daily range is that yesterday did close below the previous daily range. Yeah, it did close below the previous daily range. So therefore today, based upon that thought process, we might see a big bearish push in here. I just don't like the fact that we're right at the, well, I don't know. We don't know about this level yet. We haven't confirmed this bottom end, the data point yet. So I can't really put this in here. I'm putting this in here now, but because that's the only data point I've got from yesterday, but I could end up pushing this line all the way down here. So based upon what the market has been doing and the fact that the previous day, which was yesterday, closed outside of the range of the candle before here, this might do the same thing, but the range is all the way down here. But personally, for me to get into this trade, I'd prefer to take this sell from at the top of the impulse range. So this market is making a little bit of green candles here. Good. Go for it. Get up in here and give me a sell from here. Yeah, give me a sell from in here on the basis that you're going to try and close outside of the previous candle's range. That's what these two white lines are. Great. So that's what I'd be waiting for from this market based upon that bias. Even though I'm quite low on the range, that's what could happen today. Okay. Now the market structure, I'm not going to just hit the button. I'm going to be waiting to see market structure break in here to give me some sort of confirmation, but that's what could be occurring today. Okay. Even if it's an inside day, we might see a reaction from here. Now, why would I be identifying here as an area of interest? Because this is where the previous soldiers were in here. This is where there was a previous level in here. The market fell all the way down to here, then smash. Yeah, couldn't penetrate this level. Came back up here, did a little dance over here. There was some resistance. Some soldiers were over here also. Oops. Some soldiers were over here also. Stopping price from getting past that level, and then boom, the market decided to break through that level there with strength and speed. Look, smash. So therefore, this is an area of interest of this market actually getting back into these levels before possibly seeing a reaction. I cannot ignore this strength and speed that happened here. something I can't ignore. All right. And for this fact, this market has been bearish, pushing down here. I'd prefer to wait for this market to get back up into these levels for me to see what's happening to potentially take a sell entry here. Any questions, guys, about anything? I've been jumping around, but ultimately I'm jumping around showing you guys how we want to analyze these charts. We want to analyze these charts, and we don't want to take action until we get confirmations of things. Look, you're going to come up with an idea, and someone else is going to come up with an idea. Whose idea is correct? Well, you only know when the trade hits. But you've got to have a reason for your idea, and you've got to have a reason for entering the markets. If you don't have a reason for the idea and a reason for entering the markets, well, then what are you doing? You can call it what you want. Call it ICT, call it this strategy, call it smart money. It doesn't matter. You have to have a good enough reason to take the money out of your pockets and put them in the markets. And if that reason isn't good enough, for example, let's have a look at GU. Look, still doing a hokey cokey over here. I could have saw that big red candle and just decided, yeah, I want to hit the button for a sell. And look, we're back up on here. I would have definitely got stopped out because I probably wouldn't have been in there with a stop of 25 pips all the way. Maybe I would have. Who knows? But either way, I've got to have a reason to take my money out and get in the markets. The reason I'm waiting for is if this market breaks outside of this range and does something. When it breaks outside this range, I'm going to be watching it and watching that reason to see if there's a good reason for me to get in. If I don't have that reason, I can't just get in because I want to get in. I can't just will it. I need to trade right now because I'm in front of my laptop. No. Use your alerts, place your alerts at strategic places, and watch and see what the market does. Yeah, because the market will show you what it wants to do. Yeah, you might want it to do X, Y, Z, A, B, C, D, and F, but the market will show you what it wants to do. And then once you see what the market wants to do, it's your job to read and react to that price movement. It's your job to read and react to that price movement. Okay, we're seeing Bitcoin alert that I put in here just ringing as the market is trading down into this little area here. Is it just trying to tap into some imbalance here for it to continue coming down into our levels? Possibly. Is this a good enough reason for me to take this trade into that level? It's not a 10. I'm trading from the middle of a range. Look at this orange bit here. From the middle of the range against the overall trend. Is that a good enough reason for me to take my money out of my pocket and spend it? Probably not. And that's how you have to look at it, guys. Because if you was doing something else, you'd weigh it up like that. You'd be like, going to this club, it's all the way in Birmingham, and there's going to be this rubbish DJ there. Is that a good enough reason for me to go and spend £300 on a ticket? No. Maybe if Beyonce's performing or 50 Cent's going to be there, or you're going to be, I don't know, sharing a room with Rihanna, maybe you might say, you know what, no problem. I don't mind paying £300 for the ticket. But if that's not the case, if not enough of a compelling reason for you to do that, you won't do it. But we don't use the same discernment when we're trading. We just think to ourselves, because we sit at a computer, now's the time to trade. Well, it's not. Right now, the markets, and Alan's confirmed that there's stuff going on. We've got jolts, we've got PMI, and we've got employment stuff happening. And this week, we're going to have non-farm payroll this week. It doesn't mean that before Friday, there's no trades to be taken. It just means that the markets, you got to be a bit more discerning in regards to the type of trades you take. I hope that makes sense. I hope you've at least been able to determine and say, you know what, I need to stop hitting the button so much and be able to have a compelling reason for me to get into a trade. If you haven't got a compelling reason, this market, you're not like Jay. I'm not gonna lie to you, bro. It tapped into my zone. It made a lower low, broke structure, made a lower high, it made a lower low. It came from the bigger zone, and that's the reason why I'm like, bro, looks like the maths are mathing to me. So cool, I get you. We feel like, the market's going sideways at the moment. We're in the middle of a range and the market's going over here. And then I just thought to myself that, I'm gonna be like, bro, seems a bit flaky to me. Seems ever so slightly flaky to me. I can't necessarily say, yeah, boom, that's it's a great trade that you've taken or a great idea. I can't. Yeah. So yeah, that's what I want from you guys. Make sure that you're taking trades based upon it being the best possible trades you could take. Yeah, make sure you're not just taking trades without knowing why you've taken the trade. I think that's what we're going to have a takeaway for today. It's time. I'm going to look at something. One last thing before we finish up. Is there a particular pair someone wants me to look at and break down? Is there anything in particular someone wants me to have a look at? Is there a particular pair someone wants me to look at? So we can have a little. Let's look at gold. All right, we look at gold. All right, so if we want to go on the premise of understanding the bias, yesterday, this candle closed below the low and the high of the previous candle on the daily time frame. You could expect maybe, you could come to a conclusion, let me delete everything, that maybe, if we're saying this is the low previous candle, this is the high, that previous candle, maybe we're expecting a bearish day for this to close below this white line. All right, let's just roll with that for now. Let's roll with the market was pushing up here. Very bullish, as we understand, gold has been very, very bullish. Let's go and have a look at those three kings. Can you see the three kings? Have a look at the three kings. What happened here, guys? What happened here? Somebody knows. Because I was identifying
liquidity grabs.
Liquidity grab. So liquidity grab. Nam, 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 nam. And then straight away, when liquidity grab happens, what do I always say that the market likes to do?
Run in the opposite direction.
And that's what we've seen happen. We've seen this go like this. Look, bang. Take out all the stop losses of people that were like, yeah, solid. And zoop, run in the opposite direction. And actually broken structure on the 4-hour time frame and the daily time frame. It closed below this previous low. So maybe today's going to be another bearish day. It's possible. All right. So if today's going to be a bearish day, which potentially the market might close below this white line, we're going to be looking for excuses above for the market to be able to get an entry. So the market's come all the way in here and tapped and closed this imbalance. Have a look. And as it's closed this imbalance, the market's actually started to make some ever so slight from here, starting to trickle down. Now, from a 15-minute time frame perspective, the structure is here that hasn't been broken. Around the 15-minute time frame, we're trading within this range after the market's come and closed the imbalance. If I drop my time frame down on a 5-minute, well, we've broken a little bit of minor 5-minute structure, which is found in here. So the market's broken that minor bit of structure in here. Come all the way back in. The market's kind of, like I said to you, once again, we're in here. The energy seems to have some little bearish momentum, but kind of still, kind of still teetering in here. All right, kind of still teetering in here. I'd like to see this market break at least this 15-minute structure over here. So break outside of this box. Looks like it maybe wants to do it now. Make some retracement, some close. Maybe there's a small trade in there for you to be able to get in here for the sell. Because ultimately, based upon the bias, if we turn around and say that you get in here for a lovely little sell trade, whether you're going to place your stop above these highs or not, who knows? Okay, is that realistically we should be aiming for this market should be to try and close underneath this white line, which is the previous day low. Okay, have a look. US 30 is just pushed outside of that level there. Okay, cool. So I'll be looking at this market, for example, okay, we've just pushed outside of there, that little blue range, showing our potential indication of where we want to go. We haven't quite got down to this 15-minute structure, but in regards to that little range that's trading within, we're showing some sort of indication, bearish, okay? I'm going to be potentially waiting for some sort of retracement, all right? And potentially, I may choose to manage my risk and get in for a sell trade in gold based upon indication, correction, and continuation. Okay, and based upon the fact that if we go by previous day momentum, that previous day momentum might give us a close below this low over here, all right, which is the low of the previous day. Okay, so the market's breaking structure bearishly, and we've seen a previous bearish candle of the previous day on the daily time frame. Have a look. This big old red candle. Yeah, closed below the previous low of this green candle, which normally gives us an indication that the next day should also be bearish. Okay, as a bias, not in isolation, but just as a bias. And the market's breaking structure bearishly, little indication. Yeah, possible little correction happening right now. Okay. Now, for me to get in on a smaller time frame than waiting for a 5-minute close below here, I'd have to be on a smaller time frame. So let me go to my 1 minute for argument's sake. I'm probably not going to get too much information for my 1 minute. All right. I just want to see right now if the market turns around and closes below here without breaking this high. I want to see, is the market going to close down below here? And if the market does close down below here, I can choose to get in with my stop where it is there. What is that on gold? Let me zoom out. That distance in pips, I don't know how good gold works it out. Let's say in 360. Yeah, you gotta check it on gold. Gold, the metric's a bit different, but let's just say it's 360 pips. All right. You gotta check it. I'm not too sure. All right. Once you check it with your cashback forex, your lot indicator, and when you check it, you place in your stop and you place it small. And then once you place it and then you see how much money it is on your stop, you'll realize that you're smaller than what you even needed to be. All right, so let's have a look here. Look, we're in this level. I don't want this market to come and break above this high over here. We can see it's definitely some bulls coming in at this price point. Look, the market pushed all the way down. Here's a red candle. Then the bulls came and pushed it all the way back up into this level over here at the moment. Is this market? I'm on a very small time frame. I'm on the 2 minute, 1 minute time frame. Is this going to break this previous minor structure? Might do. Yeah, but this is why, like I said to you, on this such a small time frame, is that we're waiting for confirmations. I'm not just in the trade. I'm not telling you guys, yeah, let's get in the trade, hit the button. Yeah, we're getting a wick over this little level here, tapping into this imbalance. But are we going to get a closure above that level? And there's a little bit of imbalance here. Are we going to get a closure? We've got 5 seconds. Got 5 seconds. It was a bit of a closure above it. It was a bit of closure above it on the 1 minute time frame. Let's go back to our 5 minute time frame. We're seeing this market pushing back up here. On a 5 minute time frame, we can see we've got 1 minute and 42 seconds. And we can see a little bit of area of interest where the market might be tapping back into over here. And that's why, like I said to you, personally, gold, looking on it, 1 minute time frame, not me. Yeah? Just wait to see what happens, whether or not we're going to get a little wick up into this level. And then if the market's going to turn around and have a continuation into this direction. All right. It's once we can see this imbalance, which is our concern, this 5 minute imbalance. And we're going to be patient, see what it does. Got a minute and 11 seconds. Does the market want to wick into here and then decide to start turning around? Because if it does that, it's on a 5 minute time frame, it's still bearish. Have a look. On a 1 minute time frame, it's doing stuff. On a 5 minute time frame, it's still bearish. Even if it come up in here, all the way into that imbalance, it's still bearish. You see? Yeah. Or do it like this would be better, sorry. From there to there, and then still a bearish market if it wicks up into here. All right. So watching it at the moment. Like I said, I don't really want to be looking at gold on a 1 minute time frame. Okay. But watching it. Let's see. We'll see. I'll give a report a bit later on in the day to see what this actually did, if we went and broke this level in here. I just really want to check. I want to check the zones because it's gold and I don't trade gold often. I'm just looking at whether that is 300. Whether that is, you have to put in 300 pips or not, or whether that's 30 something pips. Actually, I think it is 300. Just making sure I've got the contract size correct. And the contract size, guys, you can always go into your MetaTrader and go and look at the contracts, and it'll show you the contract size because, like I said, it varies from broker to broker. So this is saying 100 for me. Let's have a look. Which doesn't look correct anyway. Does not look correct. Let's put in 1 in here. So 0.2. And I just definitely don't know if it's 300. I think that's wrong. It's probably 30. Okay. 0.5. All right, we shall see. we should see whether or not this market's going to push up into these levels, or whether or not on a smaller time frame now we're going to start breaking. Look, on the 1 minute time frame, I can't see any structure. That's what I'll say to you. On the 1 minute time frame, the structure is down here. You know, I didn't like the fact that over here we got an ever so slight close above here, but that could be coming from this broker Owanda. Might not be accurate. So right now I'm waiting for a closure. I'm waiting for a closure below this level for me to make a decision. Okay. If I don't get that and this market starts to now make a higher high, then it just shows me that this was a little bit of a liquidity grab and the market was to push all the way back up into here. All right. So I'm going to pop an alert in here. I actually believe it's coming down, to be fair, but I'll pop an alert in here, crossing up. I'll also pop an alert in here when this market is crossing down. It's that simple, guys. It's that simple. Have another little quick glimpse at over here. We can see the EJ. We had big rejection, demands pushing up in here, waiting for something to happen up into here for me to get involved in a possible sell. If that's what we believe it's a bearish market. On the GBP USD, I said that we're waiting for something to happen for it to break outside that blue box. We haven't broke outside that blue box. We're still in here. On Bitcoin, the market is in this range. The question we ask ourselves is this pushing up into some imbalances here, only to turn around and get down into these 4-hour levels? We'll find out. We'll see. We shall see. And the last one, did we look at US 30? I'm not going mad. Let's check. US 30 yesterday, previous day, we had an inside candle that just was sat inside of this big green range here. And ultimately, the market has kind of just been in there doing a hokey cokey. We don't really know what it wants to do there. I'm not in a hurry to get involved in US 30. That's about it, guys. That's about it. Me scanning all of those levels in here. XAU USD, we have had a reaction. We're in here, but we haven't broken this structure yet. So for all we know, this market can decide it wants to come back up in here, get all the way back up into these levels. As we know today, there's lots of news and things happening. We've got PMI information coming out for great GBP in a minute, which is interesting. Maybe we'll stay on the call for the next 6 minutes, and let's just see if this red folder GBP PMI news has any impact on our GBP USD pair. So the consensus, the previous data was 49.5. The consensus is 50.5. Let's see what the actual is. Okay. We'll see what the actual information comes out as and what type of reaction that has. Now, for people that don't know what PMI is, like I said to you, just click on here and you get some education. All right. You understand what PMI is. Just showing that a higher than expected figure should be seen as positive, bullish for GBP, whilst a lower than expected figure should be seen as negative, bearish for GBP. Let's see if we can grab some information about PMI. Normally they do show some information about it. You can see historically, what's happened. So you can see historically in November, you can see how PMI came out. You can see, and if you wanted to, you could go back in the charts to these dates and see what happened here. Let's go and let's have a little look at PMI, at what happened on November the 3rd at 9:30. That's up to GBP USD. Let's have a quick look. November the 3rd. Let's have a look. Let me put in a vertical line. Have a look at November the 3rd. Yeah, that big bullish candle was November the 3rd. All right. So November the 3rd, it came out higher than expected, and we saw GBP get very strong and bullish. All right. So ultimately, if that happens again, and right now you're looking at this in the next 4 minutes, all right, that this number comes out higher than 50.5, we might see this GBP USD that's been dancing around here make a big bullish push to the upside. Okay, we may see that occur. All right, and if that does occur, then yeah, remember what I said. I actually said that I'd prefer to see this market up here grab liquidity before it starts to go and do this. So maybe that's the reason why it's been maintaining those lows. All right, maybe that's the reason why it's been maintaining these lows, because it wants to come up here, push up here first, and then do something. Have a look at our XAU USD just ran. We've pushed all the way back up into these levels. You see, this is why we wait. We understand that we wait to see what the market's going to go and do. So the markets can come down here, it may give us an indication. I didn't want to see it breaking this structure. It made an ever so slight closure above this level, higher high, higher low, and ultimately in the next 13 seconds, it looks like it might be a higher high. Who knows? Yeah, maybe, or maybe it just wanted to actually fully close this imbalance and then it's going to do something. Maybe, all right? This is why we wait for our confirmations. This is why it's so powerful to wait for confirmations, wait for candles to close, because previously you hit the button and you just got stopped out. Okay? So, guys, just be patient. Make sure you have a good reason, compelling reason to get into trades. If there isn't a compelling reason, do not get into the trades. It's that simple. The same way if you were spending your capital, spending your money, you wouldn't just spend it on fluff. There has to be a good enough reason for you to spend your hard-earned money. You know, have the same discernment when it comes to trading. All right, guys, I'm going to put on a video here, which is from Black Sheep to 18 million. It's an interview by Abdullah Rashid with Roger Banks. For the people that are locked in on YouTube that are watching this, please do like, subscribe, share, okay? And we will be back tomorrow. But I'm going to say goodbye to the YouTube community right now. Thank you for being here.